Hey everyone, I'm Brandon Vineyard and I've been a listing broker for banks for over 20 years. I am so aggravated and fed up with all the incorrect and bullshit information out there about foreclosures on YouTube. So in this video, I'm going to go over 8 things that people get totally wrong and incorrect when it comes to foreclosures. So let's get started with number 1. You get a better deal buying at the auction.
I always tell people, y'all can disagree. You know, I'm biased when it comes to auctions, right? I feel like the auction is probably the cheapest place you can buy property. Y'all can disagree.
There is no way that you can say it's cheaper to buy properties at the auction in the long run. Every deal is different. If anything, it's a 50-50. Let me give you a good quick example. Here's a property going up for auction. The tax assessment on this property is $183,000. The maximum bid amount is $324,000. Let's say you do a drive-by and there's a blue tarp on the roof. The grass is overgrown, so you know the property needs repairs. The property is only worth $250,000 tops. I mean, top value $250,000. Nobody bids on the property. The property goes back to the bank as an REO. The bank's going to list the property at market value. Even though that might be high in the beginning, they're going to do a reduction every 30 to 40 days until that property gets listed low enough where somebody will bid on it and buy it. So it's ridiculous to say that you get a better deal buying either the auction or as an REO, because every deal is different.
Now, that depends on where you live. Let me be totally honest, because like I see y'all in Florida and California and Texas, and y'all got like a ton of people at your auctions. So of course, you know, more people at the auction, the higher that price is going to go up.
Now, I know this person is making up shit on the fly, because we have had physical foreclosure auctions here in the state of Florida in over 10 years. Everything in Florida is done online now. This video was made last year in 2022. So this is a prime example. You can't believe everything you hear on YouTube. Number 2, the banks add the foreclosure cost on top of the REO price.
The bank is going to add in fees, right? So they're going to trash it out, right? They're going to get the utilities turned on. They're going to, you know, they got to rekey it. Now, when you buy a property, you know all the fees that come along with buying a property. There's closing fees. There's real estate commissions. Now they have utilities that is on. So now all these fees go into the price of this REO that's now on the market, okay? So keep that in mind. So the price is going to be a little higher.
Wrong, wrong, wrong. Banks do not add costs from the foreclosure sale onto the price of the REO. Number 3, banks sometimes list properties on the MLS as pre-foreclosures to drum up more bidding activity at the auction.
Now, if a bank is going to show up and if a bank is concerned about losing their money, then one thing that I've seen the banks do is advertise this property as a pre-foreclosure on the MLS, or the multiple listing service. That's just if you type in and you find like Zillow, Trulia, Redfin, Realtor.com, those places that advertise all the properties for sale in the area, you will sometimes see pre-foreclosures listed as for sale, and that is the bank attempting to just drum up a bunch of interest so that people come and bid on their property so that they don't lose money or have to go through this next process. It's honestly really smart. Now, the bank might not be doing it, the bank might have a contract with a realtor, but nonetheless, that is how the pre-foreclosures get listed on the MLS.
Folks, this is probably the worst one I've heard yet. I about fell out of my chair when I heard this video on YouTube. Anyone that knows anything about real estate knows you cannot sell a property you do not own. If the property is a pre-foreclosure, that means the bank doesn't own the property. They will never, ever, let me say this one more time, they will never, ever list a property with an agent on the MLS as a pre-foreclosure to drum up more activity for the foreclosure auction. They can't. They don't own it. Not to mention, there's no way an agent could take a listing agreement from the bank if they don't own the property. So this whole concept is just ridiculous and stupid. Number 4, most REOs aren't good deals. This is another statement that I've heard in numerous videos that's just idiotic. No way could you say that most REOs aren't good deals, because REOs are going to sell. What they should have said that would have been true is that most REOs are priced on the high side to begin with. Now that would be true, but to say they're not good deals is just ridiculous. Remember, it's not like a retail transaction. An REO is going to sell. It might not sell immediately. It might take several months, but guess what? It's going to sell. Number 5, get your offer in first by going through the listing agent. This is a concept that I heard many different times on YouTube. If you go to the listing agent, you can get your offer in first before anybody else. I can submit the offer immediately, but guess what? There's not a corporate seller out there, especially in the year 2023, that's going to jump on any offer the first day it comes in. Majority of all the corporate sellers have a window where they won't even entertain, counter, or look at offers. Fannie Mae, Freddie Mac, all of the big servicers have a grace period where they won't entertain offers. This is to ensure that they don't accept an offer when it first comes in. They want the property to be saturated all over the market. They want as many people as possible to see that property. So it makes zero sense for them to counter or accept the very first offer immediately when it comes in the first day. It just doesn't work like that. Number 6, first-time home buyers shouldn't buy a foreclosure.
Do not buy a foreclosed home, especially if you're a first-time buyer. Look, hear me out. I understand we have a housing crisis going on. There's a major affordability issue going on here in this country. But a foreclosed home may not be the best purchase for you. But for your average first-time buyer, I do not recommend it. I just recently had somebody contact me about a foreclosure in a very desirable town here in Bergen County. Dirt cheap. The woman was like, I want to see this. I want to buy it. And I looked at the agent comments, and guess what? The house didn't even have running water. It didn't even have a septic. I don't even think the septic was connected to it. In this case, they weren't doing anything about it. It was just being sold as is. You had to do all this, deal with the water, getting the septic up and running. I mean, we're talking tens of thousands of dollars right off the bat. And she was insisting on it. And I said, no, do you know how to handle this? Do you have the extra money to be able to pay for all of this? And besides, you see that low price, it's not going to sell for that price because investors are going to come in and overbid. It happens all the time. I had to talk her off the ledge. I'm sorry. And I won't do it. I won't show them because I know I sound bad, right? But I'm not. I'm not. I'm trying to protect you. I'm trying to save you from throwing in a lot of money on something that you could be in financial trouble down the road because you bid up way more than you can chew.
I don't even know where to begin with this video because this is one of the most stupidest things that I've heard. This agent is not giving any benefit to anyone out there because this agent doesn't know what she's talking about. How many first-time home buyers do you think are paying cash for a property? Maybe 1 out of 100? Do you realize that programs like HUD, Fannie Mae, Freddie Mac, which are some of the biggest servicers in the country, they cater to first-time home buyers? A lot of their properties are in good enough condition where they can be financed, especially HUD foreclosures. HUD foreclosures can be a great deal for first-time home buyers because first-time home buyers gets first priority over any other buyers. This is what just really pisses me off about this industry is all the stupidity and stupid shit that agents say and do. And this is a perfect example. Just remember, if you're financing a property, you're wasting your time if you look at foreclosures that are in bad condition that can't be financed. That's the bottom line. Okay, number 7, what was owed in the property? This is a question that I get asked a zillion times. Everybody wants to know, what did the bank foreclose on or what was owed in the property when it was foreclosed? And the honest to God truth is, it doesn't matter. Bank foreclosures do not list properties based on the UPB or the unpaid principal balance. It's all based on market value. Now, I agree, sometimes the market value that they come up with is a lot higher than I think it realistically is, but they don't list it by the UPB. So what was owed in the property really has nothing to do with it. And let me give you just a quick example. I have a property right now on the market. They just reduced it to $499,900, okay? $499,900. It was originally listed for $650,000. Guess what they foreclosed on? Over $1.5 million. So if it was true that they only go by the UPB or they look at that and it's a big factor in their listing price, they would have listed this property much, much higher than even the $650. Because at the $650, that's almost 50% off of what they foreclosed on. So just so you know, whatever's owed in the property, it doesn't make a difference when you put your offer in. And don't base putting your offer in on that amount because it just doesn't work like that. Number 8, the banks are motivated and eager to get the property off their books. This by far is the number one thing that I hear everywhere. I probably heard this on every single video I watched at some point or another. It's a great term that investors love to use. And honestly, anytime I hear somebody say this, that they're eager, it just tells me they really don't know what they're talking about or they haven't dealt enough with these corporate sellers, because they're anything but fast. They're not eager. They're not motivated. They have to go through their set procedures and policies on how to list a property, and that takes time. It takes a lot of wasted time, in my opinion, and it could be done much, much quicker, but it's just not the way the system is. So do not think that you're going to get this great deal because banks are motivated to get these properties off their books. That's just not the way it works. It's not the way it's set up. And I could spend a lot of time just talking about every little thing that just proves they're not motivated sellers, okay? Now, they are going to sell the property eventually. And the biggest difference in the banks and traditional sellers is that traditional sellers might not have to sell. They might just be wanting to sell, but if it came down to it, they don't necessarily have to sell. Well, bank foreclosure, they do have to sell it, but they're trying to get as much money out of the property as possible. So the time is not the biggest factor to them, not like what most people think, because most people think they got carrying costs, they got insurance, they got utility bills, they got all this stuff going on, which is true. That does not make them motivated to get the property off their books like everyone is convinced that's the case, and it's just not. Okay, that'll do it for this video. I really appreciate it. If you have any questions, leave them below and I'll be glad to answer. As always, thank you and have a great day.